teaches like what is the trend that is being observed in say area, production, productivity, prices, taxes, public finance, etc., etc., and more importantly nowadays the new emerging fields in the field of this economics like natural resource economics. So as to become the good citizens of the country, the knowledge in economics is very important. So to continue with that, because most of the things that you learned in the first course are basic concepts, isn't it? So only when you are somewhat well versed with those basic concepts, you will be in a better position to understand the second course, as well as the two more courses will be offered to you during your third year. That is one on agricultural marketing, prices and trade, and the last course will be on agricultural farm management and production, as well as the natural resource economics. So in this course, let me share, I think the screen is visible for you, wherein I have projected or sharing the course content. So this will be like a trailer class for you people, that is you are going to, what are the things that you are going to study in this particular course. So to start with, you are going to be exposed to the basic concepts like the agricultural finance, that is its meaning, scope and significance, why there is a need to study this particular branch of science. Because in the first course you have been told that this economics, the traditional way of classifying the subject matter of economics includes, that is production, consumption, distribution, investment and public finance. Whereas the modern way to classify that or group the subject of this economics is into micro and macroeconomics. So here this agriculture economics and the other way, the branches of this agriculture economics have been told that say farm management, production economics, agriculture finance, agriculture marketing and cooperation, legal issues, all those things you have been taught. So we are picking in this particular semester about this particular branch of economics, that is agriculture economics, that is agricultural finance. After that, credit. And why there is a need to study this particular concept? Because most of the Indian farmers, they are capital starved, they are small and marginal, so they don't have their what you call the enough savings with them, hence to undertake the cultivation or to meet the cultivational expenses or other needs of investment, there is a need to go for external borrowing. So here we are going to study the meaning of credit and what is the need of credit and its role in Indian agriculture, and what are the requisites of good credit system. Because you know the meaning of system in general. Here the good credit system means the institutional arrangements or the network which are involved in purveying or what you call giving loans and other facilities so as to operate smoothly the farm business. Then after that, the agriculture credit, its meaning, definition, need and classification of this agriculture credit based upon various criterion like that of the time period or the purpose or the then the there are totally 7 bases to classify the credit into different categories. Then after that, the credit analysis, because whenever any person approaches any financial institutions, they are going to judge your personality, or they are going to test that particular person in terms of various criterion. They have been grouped as 3 R's, 5 C's and 7 P's. So here 3 R's means those particular 3 letters, 3 words which starts with the letter R. So those includes returns from the investment, repayment capacity and risk bearing ability. And in some of the books you might have noticed 4R or 5R. So in addition to this returns, repayment and the risk bearing ability, the fourth R will be the rate of interest and the last R will be the repayment plan. So in some of the books, but basically there are only 3 R's, but in some of the authors have mentioned 4 R's or 5 R's. Then you are also going to study about their meaning and what are the factors influencing this and how we can improve the repayment capacity of the Indian farmers, like that. Those what you call the elaborative aspects you are going to study as the course advances. Then credit analysis, which will be again the continuation with respect to 3 R's, here 5 C's. In one or the other way, they are going to overlap with those R's. That is, here 5 C's means 5 words which starts with the C. That is, they include credit, character, capital, common sense, and the capacity. And there are 7 P's of credit, like here the P's means the principle of, the first letter of this word principle, principle of productive purpose, principle of productivity, principle of payment, principle of protection, principle of phased distribution, principle of personality, and principle of proper utilization. Like that, here these institutional agencies, they are going to test the loan applicant in terms of these R's, C's, and P's. Then after that, there is a principle called the principle of owner's equity and increasing risk, which is going to demonstrate you, as the owner goes on borrowing more and more of the funds from the institutional agencies, he is going to run under a greater risk of losing his owned capital. But there is a buzzword for the any new upcoming entrepreneur is to start the business on the borrowed capital, because they will be very careful in using it, because that credit, the term credit is called as the double-edged knife. That means it is having edges or the sharpness on both the sides, whether you go front or back. ಕನ್ನಡದಲ್ಲಿ ನಾವು ಕರಗಸ ಅಂತ ಇರೋದಲ್ಲ, ಹಿಂಗೋದ್ರು ಕೊಯ್ಯತ್ತೆ, ಹಿಂಗೋದ್ರು ಕೊಯ್ಯತ್ತೆ. So that is why here we have to be very careful about the utilization of this borrowed funds known as the credit. So that has been explained or will be explained to you using that principle of owner's equity and the increasing risk. Then after that, the procedural formalities in sanctioning of loans, because at our point of time, we are not so much well versed with dealing with these financial institutions, except during the time of maybe making payment of the college fees or the hostel fees. But you are now more expert in what you call dealing with the financial institutions. You are not having any what you call that kind of a fear or the thing. In fact, because of this digitalization, online trading, etc., nowadays everybody is very comfortably using these what you call the banking facilities. So here, but as it has been included in your syllabus, I am going to brief here or teach you what are those 10 formalities which are going to be followed by any financial institutions while sanctioning the loans to the applicant, especially from the viewpoint of the agriculture. So there are totally 10 steps you are going to study. Then after that, sources of agriculture finance. That is means from where these farmers are going to get their needed financial assistance. So those are broadly categorized into institutional sources, which includes the our nationalized banks, private sector banks, or the cooperatives, etc., which are bound by the rules and regulations of the central bank of our country, that is the Reserve Bank of India. While the non-institutional sources includes, you might have aware about those ನಾವು ಹಳ್ಳಿಲಿ ಏನ್ ಹೇಳ್ತೇವೆ, ಲೇವಾದೇವಿಗಾರ ಇರಬಹುದು, ಅಥವಾ ಯಾರಾದ್ರೂ ಊರಲ್ಲಿ ಸಾಹುಕಾರ ಇರಬಹುದು, ಅಥವಾ ಟ್ರೇಡರ್ಸ್, like that here. That is, those includes the money lenders, friends, relatives, traders, commission agents. So because sometimes because of the what you call the low literacy level, or most of the Indian farmers, they are illiterates. They are not so what you call comfortable to deal with these financial institutions because of those long procedural formalities. As I just mentioned, they are going to subject it for different tests, as well as follow the standard what you call the procedure in sanctioning the loan. That is why they will be again going at the mercy of these what you call the non-institutional agencies, but they are highly exploitative in nature, who are going to charge you charges very high rate of interest, and those things you are going to study. That is the advantage and disadvantage of these two broad categories of sources of finance for the farming. Then after that, the institutional sources, as I mentioned, they are going to be no doubt associated with the long procedural formalities, but they are what you call charging relatively low rate of interest. Again, this rate of interest is varying with the type of the loan and the type of the bank. Relatively, commercial banks charges higher rate of interest, while the cooperatives will be with low rate of interest. And one more type of the institutions called the regional rural banks. So you are going to study about all these institutional agencies like commercial banks, what it means, what are the different functions these commercial banks are going to perform, and how they are going to create the credit, because they are not going to print the currency, isn't it? They are going to borrow it from the Reserve Bank of India or accept the deposits from the public and give it as a loan to the needy people. And how this nationalization of the banks has evolved in our country, because it has not started overnight. So it took a lot of time. So first, the then Prime Minister Srimati Indira Gandhi, during their 1969, first time imposed the social control over these commercial banks. because they are only fond of giving loans to the other sectors than this farming sector, because the reason is quite obvious, because this agriculture sector is more risky and recovery percentage is very, very less when compared to the other industries or the service sector lending. That is why they are very reluctant, or by quoting one or the other region, they are going to send back these farmers to avail the loans from these institutional agencies. That is why she imposed the social control over these banks. But however, in spite of that, the total quantum of the credit flow to the farm sector does not improve significantly. Only about if the total in the country 100 rupee loan is being given, assuming, then only 1 or 2%, 1 or 2 rupee has been given to the farm sector. In spite of that, 70% of the what we call the persons who are directly dependent on agriculture for their livelihood. That is why later the nationalization of the commercial banks took place, and again only 14 major commercial banks at that point of time we were brought under the control of this RBI, and later 6 more banks during 1980, totally 20 banks. But nowadays again there is you might have observed, the banks have been in the process of merging with only 1 or 2, because of the very important recommendations in recent times, so as to have, instead of having 19-20 commercial banks in the country, only few 4-5 of national level importance or the international standard. So they are going to merge nowadays. That process of merging is still going on, including those what you call the regional rural banks. Gramina ಬ್ಯಾಂಕ್ಗಳಂತ ನೀವು ಕೇಳಿರಬಹುದಲ್ವಾ ಹೆಸರು, RRBs, regional rural banks. So those things you are going to study. And SBI, how it came into existence, because before the starting of this Reserve Bank of India in our country during 1935, this SBI used to perform the functions of that central bank. Central bank means that is the only one bank which is having that authority of printing the currencies. Okay, so you are going to study about the objectives, functions with special emphasis on schemes, and the recent merger of all the subsidiaries of SBI, because at one point of time SBI had 7 subsidiary banks, like State Bank of Mysore, State Bank of Hyderabad, State Bank of Travancore. Like that, it has 7 subsidiary banks. Put together, it was the SBI. But now those have been already merged, and even some of the other commercial banks, those 19 commercial banks, they are in the process of merging with either Canara Bank, or Syndicate Bank has been merged with Canara Bank. Like that, those process you are going to study in the course as it advances. After that, the concepts like cooperatives, because you might have heard ಯಾರು ಇಲ್ದವರಿಗೆ ದೇವರ ಗತಿ ಅಂತ ಹೇಳ್ತಾರಲ್ವಾ, ಆ ರೀತಿಯಾಗಿ if these commercial banks and the private money lenders are very reluctant to lend loans to the small and marginal farmers with that particular objective of service, this the then government of India, because at that point of time during the flag end of the previous century, 20th century, that means during 1880s or 1890s, the then government of India has sent one person called Frederick Nicholson, so as to study how these cooperatives are functioning in other part of the world, because the England was known as the birthplace of cooperatives, and the credit cooperatives, that means ಯಾರು ಸಾಲ ಕೊಡುವಂತ ಸಂಸ್ಥೆಗಳು, they were very good functioning at very high standard in the Germany. So that Frederick Nicholson went to Germany and studied how those cooperatives are functioning and what are the factors that have contributed for the success of these cooperatives. So after returning from Germany, he recommended the government find the refusion, that slogan. So in any competitive examinations, if you go through, if you are just started preparing for simultaneously for some other competitive examinations like banking or some other public service commission examinations, in general studies you are going to get those what you call the type of the questions. So those things you are going to study here. Then microfinancing, you might have heard the name, that is SHGs, self-help groups, ಸ್ವಸಹಾಯ ಸಂಘಗಳು, and KCC, that is Kishan Credit Card. So these schemes you are going to study how they have evolved, what are the objectives, what is the present status of the schemes, and how they are helping the farmers and other persons in the society you are going to study. Then after that, the lead bank scheme, because the diversification is always, or the decentralization is always better from the viewpoint of the management, isn't it? So that is why every district has been assigned to a particular bank, and that bank needs to perform as the lead bank role. So this lead bank scheme, how it was evolved, and what is scale of finance. ಈಗ ಒಂದು ಯಾವುದೋ ಒಂದು ಬೆಳೆಯನ್ನ ಬೆಳಿಬೇಕಾದ್ರೆ ಒಂದು ಎಕರೆಗೆ ಎಷ್ಟು ಸಾಲ ಕೊಡಬೇಕು ಅಂತ. ಸೊ ಡಿಪೆಂಡಿಂಗ್ ಅಪಾನ್ ದ ಆಕ್ಚುಯಲ್ ಕಾಸ್ಟ್ ಆಫ್ ಕಲ್ಟಿವೇಶನ್, ದಿ DLTC, the district level technical committee, comprising the representatives from different financial institutions and the farming community, they are going to every year fix a particular amount depending upon the crop, the variety, the situation, and the actual cost of cultivation involved in raising that particular crop, and that will be circulated to banks. And based upon that, they are going to advance the loans. That is known as scale of finance. That is the quantum of credit per unit activity. On the acre irbodu, athwa a unit of livestock like 5 milk animals, maybe the buffaloes, maybe the crossbreeds, or 1,000 birds of poultry. Like that here, this scale of finance is with respect to the short-term loan, while that unit cost is with respect to the long-term loan. So long-term loan, like that of maybe digging a borewell or open well, or construction of the farm pond or farm building, etc., or tractors or any heavy machinery and equipments, because where the farmers cannot repay all the loans within 1 year, isn't it? They do require some what you call additional years to repay the loan. So depending upon the time period, as I mentioned, short-term loan, medium-term loan, and long-term loan. Short-term loan repayment period is up to 18 months, and 18 months to 5 years, that is called as medium-term loan. And if the repayment period is more than 5 years, that is known as the long-term loan or the term loan. This medium-term loan and the long-term loan, they put together known as the term loan. So for that, there comes the concept called the installment every year or every 6 months, or depending upon the nature of the returns that particular asset is going to generate, they are going to advise to the borrower a particular what you call that type of loan repayment plan. Okay, that those things also you are going to study. Then role of this lead bank, district credit plan. You know the meaning of plan. Plan is nothing but it is thinking in advance the future course of action. Then credit you know already. Then district you know the meaning. So district credit plan means it is a plan consisting of, for the coming year, what are all the sectors and how much of loan is needed so as to meet the aspirations of all the what you call the prospective borrowers in the agriculture or in the industry or in the service sector. So for the district as a whole, they are going to prepare the plan. How much would be the total demand for the credit during the coming year? That will be worked out by, as I mentioned, the DLTC, or here only L is missing, that is district consultative committee. Then DIR scheme, differential rate of interest. That means, you know, just to help the socially disadvantaged people like scheduled caste and scheduled tribe people, wherein they are going to eligible to avail the loans at a very, very low rate of interest of only 4% per annum. So that scheme, how it evolved, who recommended it, and what are the advantages, and what is its what you call the benefits and the current what you call the scenario with respect to this scheme, you are going to study. Then farm graduate scheme. Farm graduate scheme means any graduate who completes his degree from the farm universities, they are going to what you call get some financial assistance. In addition to the degree, they need to undergo a training with the BANAs for 3 months, so that here 5 lakh per person, if they are going to combine 4 to 5%, then up to 50 lakh or 1 crore rupee will be given, so that they can start their own business as an agriculture entrepreneur. And how this farm graduate scheme is addressing the issue of that employability of our farm graduates, because if everybody is just waiting for the government job, then we cannot provide them, isn't it? Instead of that, if they could what you call start their business instead of job seeking, they can become the job providers. Then service area approach. In this particular scheme, a particular locality, geographical area, will be assigned to a particular bank. As I mentioned, about 19 commercial banks are there. So for that, here every bank will be assigned a particular area as the service area. So if it is the bonded duty on part of that particular bank which has been given that particular area as a service, they need to supply the needs, provided they fulfill all the criterion and pass those C's, R's, and P's of credit that we have just now discussed. Then after that, we will move on to the higher financial institutions at the national level. As I mentioned already, RBI, that is Reserve Bank of India. But Reserve Bank of India is only one bank which takes care of all three sectors of the economy. So those sectors you already know: primary sector, secondary sector, and tertiary. Primary sector, that is agriculture and other associated. Secondary is industrial sector, and service sector, which is growing at a faster rate, service providers. So hence, to cater to the needs of this farm sector, the Reserve Bank of India has started a specialized bank known as NABARD, National Bank for Agriculture and Rural Development, during the year 1982, on the recommendation of Card or the that person that a particular committee. So how this bank came into existence? Because there was only a particular branch in the RBI, like ACD, that is Agriculture Credit Department, and one more ABRD. So those two have been merged and formed this NABARD during the year 1982. So these are the two institutions at the national level you are going to study, and at the international level you are also going to study something about what is World Bank, what are its what you call the associated branches, and then ADB, that is Asian Development Bank, IMF, that is International Monetary Fund, and at the national level, that is Deposit Insurance and Credit Guarantee Corporation of India, DIC, GCI. That is because, like nowadays, you know, the things which are facing a lot of risk and uncertainties, people are going for insurance. Say we people are going to what you call insure our life, that is like LIC, isn't it? Life insurance with LIC or even private companies. And we are also having in our country the crop insurance, vehicle insurance, isn't it? Like that, here the banks are also going to insure their accounts. Here, that is what we call the Deposit Insurance and Credit Guarantee Corporation of India, which takes care of the every account opened by an individual with any financial institution is insured. Because if somebody or if some bank has been vanished or what you call the underperforming or incurring losses, then in that case, this DIC GCI stood as a guarantee for the person to get back his money which has been deposited with any financial institutions. Then after that, the analysis of these performance of these financial institutions using different statements, like you might have heard the terms, that is balance sheet, income statement, cash flow statement, break-even point analysis. So here the every year, you know, the financial year starts from April 1st and ends on March 31st, isn't it? So during this particular what you call the period of 1 year, how the financial institution has performed can be very easily understood by preparing these financial statements known as the balance sheet and income statement. Balance sheet is net worth statement, and income statement is the P&L account, profit and loss account. And also you are going to study about this concept called the break-even point analysis. So this break-even point is that particular point where your total returns are equal to the total cost. So ಎಷ್ಟು ನಾವು ಖರ್ಚು ಮಾಡಿರ್ತೀವಿ ಅಷ್ಟೇ ವಾಪಸ್ ಬಂದಾಗ no loss, no profit. That is known as the break-even point. Then after that, as I mentioned, credit, it is a like a double-edged knife. So credit basically refers to certain amount of money borrowed for certain purpose with certain rate of interest to be repaid after certain time period, isn't it? ಸಾಲ ತಗೊಂಡಿದ್ರೆ ನಾವು ಕಟ್ಟಲೇಬೇಕಲ್ವಾ? ಸೊ ಹಾಗಾದ್ರೆ ಸಾಲ ತಗೊಳ್ಳುವಾಗಲೇ ಈ ಫೈನಾನ್ಷಿಯಲ್ ಇನ್ಸ್ಟಿಟ್ಯೂಷನ್ಸ್ ಏನ್ ಮಾಡ್ತವೆ? They are going to advise a suitable repayment plan depending upon the purpose for which it is borrowed and the nature of the returns what that particular investment activity is going to generate. So there are different loan repayment plans you are going to study, like a straight-end repayment plan, partial repayment plan, amortized repayment plan. Again, under amortized repayment plan, there are two types: amortized decreasing repayment and amortized even repayment plan. Variable repayment plan you are having, and also we are having the reserve repayment plan. So with hypothetical examples, we are going to study all these types of loan repayment plans in practicals, but it is also included in the theory part, and many years question papers do contain what you call the questions on this loan repayment plan. Then after that, you are going to study about this is the heart of this particular course. Heart means that is how much important a heart for any living thing. So this is the core content of the course, that is the project. So what is the meaning of project, or the different definitions and the phases of this project life cycle, and the guidelines for the preparation of the project reports. So here comes that particular concept known as the time value of money, because money value won't keep constant or same over a period of time. It is going to increase, or sometimes it is also going to decrease. So that because of those four reasons, because money has got time value because of uncertainty, because we cannot predict with certain degree of probability anything in future, and its earning power, and also the obsolescence, that is the things are going to lose their value as the time passes. So this we are going to account for this time value of money through these two concepts called the compounding and discounting. Okay, so compounding is nothing but it is a process of determining the future value of present sum. ಸೊ ಇವತ್ತು 100 ರೂಪಾಯಿ ಹಾಕಿದ್ರೆ ಒಂದು 10% ಬಡ್ಡಿ ದರದಂಗೆ ಒಂದು ವರ್ಷ ಆದ್ಮೇಲೆ ಎಷ್ಟಾಗತ್ತೆ, ಅದು 110 ಆಗತ್ತಲ್ವಾ. ದಟ್ ಈಸ್ ಯು ಆರ್ ಗೋಯಿಂಗ್ ಟು ಫೈಂಡ್ ಔಟ್ ದ value of the present money in future given the frequency of compounding and the rate of compounding. And the discounting is exactly opposite of compounding. That is, if somebody says that I will give you 10,000 rupee after 2 years, but that 10,000 rupee after 2 years may not be worth of same 10,000 rupee today. It may worth around 7,000 or 8,000, because there is a saying in English that is one bird on hand is better than two bird in bushes. ಯಾರೋ ಬೇಟಾಡಕ್ ಹೋದಾಗ ಗಿಡದಲ್ಲಿ ಅಥವಾ ಕಂಟಿಲಿ ಎರಡು ಪಕ್ಷಿ ಇದಾವೆ, ಅದಕ್ಕಿಂತ ಕೈಲಿರೋದೇ ವಾಸಿ ಅಲ್ವಾ. So that is why, because there is a risk of he may not be succeeding in what you call the hunting those birds which are there in bushes, but he is very much happy with only one bird on his hand. Then here, that is why here we are going to subject to this what you call the different analytical techniques which are broadly grouped into two categories: undiscounted measures and discounted measures. Like you might have, while reading any newspapers or hearing news, you come across this DCR, benefit cost ratio, NPW or NPV, or NPV or NPW, net present worth or net present value, and IRR, internal rate of return, profitability index. How these are helpful in taking the decision whether it is worth to invest in that particular activity or not, are going to be judged based upon the value of this, what they call the different values that you are going to get for these concepts called NPV, DC ratio, IRR, and the profitability index. Then after that, the second part of this, because this course is sorry, agriculture finance and cooperation, AEC 121. So the second part is cooperation. So Manushya Samaja Jeevi, ellarigu gottide alva, he cannot live in isolation. He do depend on many people in the society, isn't it, to fulfill his wants. However, when it comes to the point of this business can be started in number of ways. Like an individual can start, or two persons can join, two or more persons can join and start the business. That is called partnership. Because in the first course only you have studied the four basic factors of production: land, labor, capital, and organization, isn't it? So that organization can be in number of ways: a single person, or partnership, or cooperatives, or joint stock company, or public undertaking, that is government undertaking. So business can be done in number of ways. So but when people are unable to what you call that contribute money to start any business, in that case what happens? They are left out of that particular group of persons who are starting a business. That is why, to help the poor people, needy people who are really want to make use of this what you call the service oriented organizations, that is cooperatives, this cooperation is going to be a panacea. So there is a saying in connection with this cooperation, that is cooperation is considered as a panacea for mitigating all sorts of socio-economic evils in our country. ಸೊ ಕನ್ನಡ ಮೀಡಿಯಂನಿಂದ ಬಂದವರಿದ್ರೆ ನೀವು ಸಾಮಾಜಿಕ ಪಿಡುಗುಗಳನ್ನು ಒಡೆದೋಡಿಸಲಿಕ್ಕೆ ಇರುವಂತ ಬಲವಾದ ಅಸ್ತ್ರ ಅಂದ್ರೆ ಸಹಕಾರ. ಸೊ ಕೋಆಪರೇಷನ್, ಸೊ ಇಟ್ಸ್ ಮೀನಿಂಗ್, ಡೆಫಿನಿಷನ್, ಎಕ್ಸಿಮ್ಸ್ ಆಫ್ ಕೋಆಪರೇಷನ್, ಪ್ರಿನ್ಸಿಪಲ್ಸ್ ಆಫ್ ಕೋಆಪರೇಷನ್, and agriculture cooperation, etc., you are going to study. And also we are going to touch upon how this cooperative movement in our country has started in our country, its objectives and significance of cooperatives in the Indian agriculture we are going to study. Then if you are coming from the what you call the rural area or the villages, you might have heard or seen in your village, that is PSCS, that is Primary Agriculture Cooperative Society, Prathamika Pattina Sahakara Sanghagalu anta alva. So like that, here in the cooperative credit structure we are having 2-tier and 3-tier. So 3-tier cooperative credit structure consisting of PSCS, that is Primary Agriculture Cooperative Societies, and they are federated at the district level with the district central cooperative bank, and they are again federated. That is, all these district level central cooperative banks have been federated into state cooperative banks, Apex Bank. Okay, so these are involved in supplying the short-term credit to the farmers, while the medium-term and long-term credit are being supplied to this farming community through those PLDB and CLDB banks, but their names have been changed into PCARDBs and CCARDBs. So during the course, we are going to study in detail about the objectives, functions, their performance, etc., etc. Then again, the lamps andre gottalla, light, isn't it? But how exactly it coincides with that particular? It is an acronym for large size Adivasi multi-purpose cooperative society, especially for the tribal people who are again far away from this society and all kinds of those what you call the social amenities like education, health, sanitation, etc., etc. Hence, to help these people who are in the living in around that particular forest areas, these large size Adivasi multi-purpose cooperatives are being started in our country, which are taking care of the what you call the credit requirement of this tribal people, as well as undertaking and helping these tribal people to market their produce. So those are the lamps, how they have started in our country, what are their objectives, functions, etc., etc. We are going to study. Then after that, FSS, that is farmer service societies, their special features, objectives, and functions we are going to study. Then with respect to that agriculture cooperation in India, we are going to study about the different types of the credit cooperatives, multi-purpose cooperative societies, and the service cooperative societies, which have been just now listed in the above para, including that role of this ICA. ICA, it's an acronym again, or a short form of International Cooperative Alliance, and NCUI, National Cooperative Union of India, and NCDC, National Cooperative Development Corporation. We are going to study about how these institutions are promoting the different types of the cooperatives in the country as well as across the world for helping the needy people in the society. We are going to study. Then after that, developments in the agriculture credit, like banking reforms and their implications on the agriculture credit. We are going to go through the reports and the recommendations of some of the committees like Narsimhan Committee, Kusro Committee, Bhandari Committee, and All India Rural Credit Review Committee, Survey Committee, and Committee on Cooperative Credit, Agriculture Credit, etc., etc. We are going to look at the gist or the recommendations of these committees, which have been appointed by either the government of India or the Reserve Bank of India, mainly to study the different types of the cooperatives, and they have given very good suggestions and what is the actual status of those recommendations, whether we are implementing them and benefiting the people in the country or not. And then lastly, the bank norms and SWOT analysis we are going to study. Bank norm means bank is an agent, isn't it? So they are accepting the deposit from public and they are meeting the credit needs. So what are the different norms like Basel norms, those things we are going to study. And lastly, that SWOT analysis of this banking sector. SWOT means it is an again acronym for or short form for strength, weaknesses, opportunities, and threats. So with respect to the banking sector, we are going to perform this what you call the SWOT analysis and try to study the recent developments in the country as to what measures we can to improve the performance of different financial institutions. So this is with respect to the theory component, which is very short course, but interesting, and it will be very useful for your routine life, because whether you are a doctor, whether you are a professor, whether you are a engineer, whether you are a farmer, the knowledge in banking, the knowledge in economics is going to help you manage, because the basic the meaning of this economics is household management, alva? Household management. ಹಾಗಾಗಿ ಆರೆ ಒಂದು ಬಿಸಿನೆಸ್ ಇರಬಹುದು, ಹೌಸ್ಹೋಲ್ಡ್ ಇರಬಹುದು, knowledge in economics, knowledge in finance is very essential. Then the same things will be dealt with some numerical examples in practicals like estimation of the credit requirement of the farm business. ಒಂದು given farm size ಗೆ ಸಾಲ ಎಷ್ಟು ನೀಡ್ ಇರುತ್ತೆ, ಅವನ ಸೇವಿಂಗ್ಸ್ ಬೇಸ್ ಮೇಲೆ ಅಂಡ್ ಅವನು ಬೆಳೆಯುವಂತ ಬೆಳೆಗಳಿರ್ಬೋದು ಅಥವಾ ಎಂಟರ್ಪ್ರೈಸ್ ಇರ್ಬೋದು, based upon that we are going to estimate the credit requirement of the farm business. Then after that, the determination of most profitable level of capital use, because no doubt there may be easy access to the credit, but if you are just what you call the crossing that particular limit, then you are incurring unnecessarily the extra burden of paying the interest on additional amount or the over and above the requirement of the loan. That is why we are going to study here using some numerical examples. What is the most profitable level of capital use or the investment? Then after that, there are different opportunities for the farmers to cultivate, maybe in terms of the crops or the livestock or the combinations of these. So how he can allocate his limited capital among the different enterprises using another principle of economics, LEMR, you are going to study. That is optimum allocation of scarce capital among different enterprises. Then after that, you will be having exercise, very interesting exercise on compounding and discounting. Then you are going to analyze using different ratios. So those are financial statements like balance sheet and income statements, and how these things are being prepared using some case studies you are going to study. Then after that, you are going to work out these what you call the different techniques of project evaluation, whether it is economically viable and financially feasible. Those things will be tested using those payback period, whether it is rate of return, NPV, BCR, and IRR. Then you will be taught on what are the different techno-economic parameters in preparing the project. Because if anybody wants to start a business and if you want the financial assistance, then you will definitely, whenever any person approaches the financial institutions, they will ask you to submit the project proposal. So how to prepare the proposals for borrowing of loans? We will be undertaking the different what you call in the format of project proposals. Then after that, appraisal of the loan proposal. So once the application is submitted, how these financial institutions are going to accept it or suggest for modifications and resubmit, then they are going to sanction the loan. At first instance, you may not be or that particular person who has submitted the proposal may not be got succeed in getting the loan sanctioned, but with all those the suggestions, if incorporated in the project proposal, then they are going to get the loan sanction. Then after that, how we can prepare the bankable projects for various agriculture crops or the products, including their value-added products or some say long-term investment like a mango orchard or the dairy for etc. etc. Then in last three practicals, we are going to analyze the performance of cooperatives using secondary data. That is, as I mentioned, the history of cooperation started at the start of the 20th century or very later part of the 19th century in our country. How the number of these cooperatives, the different types of the cooperatives have evolved. You can collect the data from the secondary sources, and we are going to study their performance. After that, the performance of these commercial banks and the regional rural banks, again using secondary data. And lastly, if buses are available and also the conditions are congenial, we are going to take that opportunity to take you to the visit and study the performance of different cooperative banks, credit societies, commercial banks, or NABARD regional offices here in Bangalore, very near to that the Bangalore Kandaya Bhavan ಅಂತ ಇದೆಯಲ್ಲ, there only, and some lead banks, so as to acquire some first-hand knowledge of their management schemes, procedures, etc., etc. And I also listed here some of the important books that you can go through for any of the what you call the shortcomings or the gaps that you notice while covering the notes from my side. You can go through these books. They are ample number of copies of these. All these books are available in our library. I'm going to share this list along with the this list of practicals as well as the theory component to you. You can go through, or you may be already having with you the syllabus of all these courses with you in that course curriculum. Idre hangaitu illandre I am just going to share you. So this is what is expected. So at the end of the course, you will be learning. So what are the different schemes in the financial sector that are taking place, and how the project proposals are prepared, and how the investment is going to be valued or evaluated, whether it is profitable or not. All those things you are going to study by subjecting them to different principles of economics in this course. So friends, this is what I wanted to say in this particular first class. And if you are having any other additional information needs to be covered in this course, you can just let me know by unmuting your mic maybe may not be strictly with respect to this only course content, but also it may be useful for you people so as to deal with the different financial institutions, that you can either send message to my number, or you can also send a message in the chat box. uh, if you are just allow me, I can start the course, or else we will reserve it for uh, Wednesday first hour. ಏನಂತೀರಾ? So this is the trailer of the course. So the expected outcome from this particular course. So my suggestion is just kindly go through. If you are having, maybe might have been shared to you the soft copies of the first course, those basic concepts, all those things, and the good service definition of the different concepts that have appeared in the first course, you just kindly go through so that it will be easy for you to follow in this particular course, because all those basic concepts will be always figuring time and again in any of the course in economics. With that intention, relatively a heavy content has been included in the first course. Okay, friends, kindly any one of you can just let me know if there are any issues with respect to this, ಅಥವಾ ಇನ್ನು ಅಡಿಷನಲ್ ಆಗಿ ಏನಾದ್ರು ಇದ್ದಿದ್ರೆ ಅನುಕೂಲ ಆಗತ್ತೆ ಸರ್ ಅಂತ ಹೇಳೋರು ಇದ್ರೆ just appropriately at that point of time I'm going to cover that particular aspect that may be of some use for you people. Divide up this course in completing the formality of the course. Over and above that, if anybody are interested, yes, Chaitra, or you raise the hand, just let me hear from you. You can just unmute your mic and interact. Yes, please.
Sorry, sir, it has mistakenly I have been raised hand.
No, don't say. You have got that, what you call that, opportunity. You can talk if you are just particularly interested in any topic. You can also communicate to me. Try to
Nothing, sir. If I got, I will definitely inform you, sir.
Okay. Thank you.
Thank you, sir.
Okay. Gaddi Sir, 88 have joined. I think regularly you are taking that screenshot ತಗೋತಿರಲ್ಲ,
ತಗೊಂತೀನಿ ಸರ್
for the attention. Later you can share it to me.
Okay sir.
Okay. ಹಾಗಾದ್ರೆ we will meet at 9:30 ಅಲ್ವಾ? 9:30 ಗಿದೆ Wednesday.
ಹೌದು ಸರ್
ಓಕೆ, ಅವತ್ತು ಸ್ಟಾರ್ಟ್ ಮಾಡೋಣ ಕೋರ್ಸ್ ಅನ್ನು.
ಓಕೆ ಸರ್, ಸರಿ ಸರ್, ಆಗ್ಬೋದು ಸರ್.
Okay, thank you. Just mention
thank you, sir.
With the start of the course that yes, you are lucky enough to spend a lot of time with your family because of this COVID. You also simultaneously pay some attention to the courses also, because all of a sudden there may be what you call the announcement of the examination or submission of the assignments, etc. Here also you have to be very attentive towards the studies also. Okay
sir.
Okay, be safe, stay home, and all the best. Thank you. Good day.
Thank you
sir.
Thank you sir.
Thank you.
Thank you, sir.
Bye.